Welcome to Elder Care Insights with Assisting Hands Home Care, serving all of Lee and Charlotte County, where we explore important topics for seniors and their families right here in the Fort Myers area. Today we're taking a deep dive into an important topic that affects many seniors and their families: long-term care insurance. If you or a loved one has a policy, this is information you'll want to know. I'll be breaking down what long-term care insurance is, how it's used, common myths, and why so many people don't activate their policies. Plus, we'll go over key terms you should know and exactly what it takes to start using your benefits. So let's get started. Long-term care insurance, or LTC insurance, is a type of insurance policy that's designed to help cover the costs of personal care services that many seniors eventually need. This includes in-home care, assisted living, and nursing home care. In some cases, policies also provide funds for home modifications. We actually recently had one client that had a John Hancock policy that was able to redo their shower so that it was handicap accessible. This made bathing easier and also safer for this client. There are many insurance carriers that have long-term care policies, but you may be familiar with names such as Bankers Life, John Hancock, or Genworth, just to name a few. Unlike traditional health insurance, which covers medical care expenses or expenses associated with home health care, which we covered in an earlier segment, long-term care insurance focuses on non-medical assistance, such as bathing, dressing, continence care, and homemaking, exactly the kind of care that we provide at Assisting Hands Home Care. So, how does long-term care insurance work? Policyholders pay premiums over time, and when they need care, they can file a claim to receive benefits that help cover the cost of care. But using these policies isn't always as straightforward as people assume, which brings me to my next topic: why people don't activate their policies. So many seniors who have long-term care policies never actually use them. In fact, statistically speaking, 50% of policies never even get activated. We've seen this time and time again, where we discover an existing client has a long-term care policy and they aren't using it, or where we have a new client who unfortunately passes away before they ever have the opportunity to benefit from their policy. Why is that? Well, here's some of the most common reasons that we've found. The first one is sometimes, especially when the children are coordinating care for their parents, they don't realize that their parents even have a long-term care policy that they took out many years ago, and they don't think to ask about it. One way, if you're a child that's trying to coordinate care for your parents, you may be able to understand if they have a policy, is if you see that they're making payments every month to some kind of an insurance policy. Long-term care insurance premiums are paid until you activate your policy, so you should see some kind of a record in your parents' banking of them paying insurance premiums. Another reason why these policies don't get activated is people don't always realize that they're eligible. So many people assume that they have to be completely incapacitated or living in a nursing home to even open a claim. But most policies allow for home care, and generally they can activate when a person needs help with 2 or more activities of daily living, or if they have a significant cognitive impairment that prevents their loved one from leaving the home alone. We'll go into a little bit more depth in this in a little bit. Another reason that we see why people don't activate their policies is they don't know how to even start the process. The paperwork comes in a big stack and it can be overwhelming, and many people don't have guidance on what to do to even start the process, so they just don't. Generally speaking, starting the process is as simple as calling into the insurance company, which holds the policy, opening a claim by answering a few questions, and informing them of the contact information of the home care agency that they're going to be working with. At Assisting Hands, we take care of the paperwork from there. Sometimes people don't activate their policy because they don't think that it's worth all that much. And we'll cover this in a later discussion, but there are inflation riders that sometimes can make a policy pay out a lot more than people realize. Another reason that we see people not wanting to use their policy is they want to save it for later. So some people hesitate to use their benefits, thinking they should wait until they're in worse condition. Unfortunately, waiting too long can sometimes mean missing out on care that could improve quality of life now. I can't begin to count how many times we've met with somebody who's finally decided to start getting help at home. They start the process of activating a claim, and then they pass before they even benefit from it. They don't even see a dime paid out from it. In fact, in all the years that we've been doing this, we've seen just one client who actually used the entire benefit of their long-term care policy down to the very last penny. A thorough review of your policy should be done so that you understand exactly what you're entitled to, as well as understand if there's any time limits or dollar limits associated with your policy. In some cases, we've seen policyholders that don't have a time limit or a dollar limit to either. Now, if I've piqued your interest about long-term care policies and you or your loved one has one and you're starting to look through it to understand exactly what's included and what the benefits are, there are some important terms you should probably understand first. The first one is the elimination period. So this is like a deductible, but in terms of time. It's a period of time that you have to pay for care out of pocket, and it's a set number of days before your benefits kick in. The way those days are counted vary, so it's important to understand the fine print. In some cases, it's straightforward, and those are calendar days. In some cases, it's service days, and there's other variations of that as well. Sometimes a stay in a rehab hospital can count towards that elimination period. The next thing is the inflation rider, and I mentioned this earlier. Sometimes policies will increase the benefits over time in order to keep up with the rising cost of care. Most policies we've run into include this inflation rider of a certain percentage per year. So we've talked to clients and they say, I don't want to activate my policy because it's only a payout of $50 per day. But after reviewing more carefully, we find that they have an inflation rider, which actually entitled them to a lot more than they thought that they would be entitled to, and it allowed them to comfortably pay for their care. The next thing that we should cover is limitations. So all policies are going to have some kind of a limitation. Some have more than others. They vary, though, from insurance company to insurance company and even policy to policy. So these limits generally come in the term of a form of time or money or a combination of both. So examples of this would include a lifetime dollar amount. Maybe it's $300,000 is the limit that it'll pay out over the course of the lifetime of this policy. Some policies will have a defined period of time, so they will only pay out for a 5-year period. And then there's other policies that maybe have a daily or weekly dollar limit. Some policies will have a combination of all three of these. Sometimes people get super lucky and they may not have a lifetime dollar limit, or they may not have a lifetime time limit, but they have a daily dollar limit. So again, you got to look at the fine print and see exactly what's included in that policy. The next thing we'll cover is activities of daily living, or you may see that notated as an ADL. An activity of daily living is pretty much what it sounds like. It's an activity that you need to do daily. So activities of daily living are things like bathing, dressing, continence care, eating, ambulation, or fall prevention. And just because a person requires assistance with an activity of daily living, that does not mean that they have to be completely unable to do that activity. It just means that they need assistance so that they can do it safely. So this could include things such as being able to shower yourself, but maybe you need a little extra help getting in and out of the shower, or you need somebody with you when you're out and about to prevent falls. Now that you're starting to understand the basic terminology, the last thing you'll need to understand is what the specific policy requires in order for the policyholder to activate a claim. So most policies have specific requirements that must be met before they will start paying for care. The most common requirements that we've seen are needing assistance with at least 2 activities of daily living, like the bathing, dressing, toileting, safe ambulation. And again, we've seen people that just needed assistance with these things, and that does qualify as an activity of daily living that the person needs help with. Now, sometimes folks are fine physically, but they have a significant cognitive impairment, and they live with their spouse or their kids, and they can't be left home alone unsupervised. And that person may have a policy, and they're able to use that as well so that their loved one is able to go out and run errands and have a little bit of a life of their own as well. Now, again, the paperwork has to be completed. Mostly that's done by the agency of choice. And generally, a nursing assessment of the policyholder is needed to be completed to ascertain that the policyholder does in fact need the care that they say that they need. This can be done by your doctor. Sometimes the agency nurse can do this, or sometimes the insurance company will send out a nurse to the policyholder to conduct this assessment. And then once the completion of that elimination period is done, then the policy will start to pay out to the policyholder. I mentioned earlier that a lot of people don't activate their policies. The statistics behind this are fascinating. Let's talk about these for a minute. Right now, there are currently 8 million long-term care insurance policyholders in the United States. Of those, about 4 million of those policyholders can qualify to activate their policy per the terms of their policy. So that's about 50%. Now here's the startling fact. Only about 300,000 policies are even activated and being used right now. 300,000. That's 7.5% of policyholders which are eligible to activate their policy that could be getting help in their home that actually have activated their policy, which is just amazing to me. And finally, did you know that once you activate your policy, those premiums that you've been paying stop? So if you've got one of those policies that doesn't have a lifetime dollar limit max or time limit max, you really can't activate too soon if you need the care. And sometimes we find that those policyholders will activate and maybe they need help once or twice a week. And as their need increases, then we can increase the number of hours that we provide them. So the final thing I wanted to talk about is a trend that we've been seeing lately, which is a little bit disturbing to me. It's where insurance companies are offering cash to change the terms and conditions of insurance policies. So we've been hearing from people who are policyholders and their insurance company is offering them a lump sum of cash in exchange for a reduction of benefits. And I actually ran across one such offer from Genworth where a woman had a policy that had no lifetime maximum in terms of dollars or in terms of time limits. It was just a daily max. And Genworth offered to pay her $7,000 to reduce the lifetime maximum to $86,000 and a maximum of 2 years of payouts, which could have cost this woman hundreds of thousands of dollars. While the cash payout is tempting, you really should be considering and understanding what you would be giving up in exchange for that. So if you're a long-term care policy holder, I would really encourage you to try to understand your policy. If it's a lot to understand, that's okay. Talk to somebody that sees this every day. We've analyzed a lot of policies at Assisting Hands because we are very familiar with them. Thank you for tuning in today to Elder Care Insights with Assisting Hands Home Care, serving all of Lee and Charlotte County. If you found this discussion helpful, be sure to subscribe, leave a review, and share it with others who might benefit. If there's another topic you would like for us to cover, be sure and comment so that we can cover it in the future. Stay safe, stay healthy, and until next time, take care.